Alright guys, nothing has been happening so far, but we saw some retracements on Euro dollar and then a continuation of the trend. We saw some retracements US dollar yen as well, and most likely we're going to continue to see that trend of the downtrend continue. So only a few things that have been moving the market, and that has been yesterday the CPI from Europe, also the German CPI on Monday, and then tomorrow we're going to be looking at the NFP. So I'm going to touch base a little bit on those topics before we go and talk about any other stuff. But before we go any further, just two things. First one is today's Wednesday, so we do have the webinar from 4 to 5 p.m. And I will be explaining my trade ideas, my high reward and low risk setup. So if you are willing to come, the link is on the description for you to join the Telegram. So as soon as you join the Telegram, around 4 p.m. in Australia, we'll be sending the link for you to join the Zoom meeting for free. Also, don't forget to subscribe to the channel and give us a thumbs up. That helps a lot. Now let's get to the video. So we had the CPI from Europe yesterday. The actual came in at 2%. So not big difference from the consensus, because the consensus was 2%. So in line with the expectations, but higher than the previous. So the previously it was 1.9%. So 0.1%, a little bit higher. Nothing too crazy, all right? Then that was at 7 p.m. At 11:30 p.m. we had Fed Chair Powell giving us in his speech, and he say he would have been cut. Well, not he, but the Fed would have been cut already the rates if it wasn't because of the tariffs from Trump. So what Trump is trying to do, basically, as they say in January or even in December, I can't remember now which month was it, but I've made that very clear that tariffs will only delay the rate cuts because that will generate more inflation pressure. So therefore, the Fed will need to maintain the rates higher for longer. And if they have to maintain the rates higher for longer, then what can possibly happen is Trump will be very mad. But Trump has nothing to do with the central bank. So what Trump wants to basically do now, his strategy is take Jerome Powell off and put someone that he sort of trusts that will cut the rates, and then the rates will be cut. But something similar happened in Brazil, and you know, history usually repeats itself in the future. So just talking a little bit briefly what happened in Brazil, we had very similar. So we had the president of Brazil saying that the rates has to be cut. Unfortunately, they were able to change. All right, so they were able to change the central bank chair, and one that they were trust that they would cut the rates. Since then, 4 times increased the cuts. All right, so 4 times they've increased the rate in Brazil. So what could possibly happen is exactly the same thing, okay? So I know maybe it's different, but it's just, you know, history. It's just the data we got so far from South America to North America, okay? So that's very interesting what's happening at the moment. I don't think, you know, Jerome Powell will sort of do whatever Trump wants him to do, because it's out of talk here at the moment. Also, another thing is that they are predicting 3 cuts already. So 75 base points until December this year, and that is 25 in September, 25 in October, and 25 in December. So 75 in total for this year is predicted already for the Fed. Inflation is slowly coming down, but the PCE and the NFP we're going to be looking tomorrow, but the PCE is still somewhat elevated, all right? If the NFP tomorrow comes a little bit lighter, you know, a little bit less than what was expected, then we have green light for the Fed to cut maybe 80 to 85 basis points, okay, until end of the year. So the reason we have the NFP tomorrow and not on Friday is because Friday, the 4th of July, is the Independence Day for USA. So you can expect some sort of very low volatility on US pairs, okay? So we're gonna have the NFP, on Thursday, and then on Friday we can expect already very low volatility, maybe very high volatility on Thursday, low volatility on Friday, and back on volatility next week. So that being said, the numbers are looking pretty interesting, you know. So the NFP is expected to be 120,000 from the previous of 139,000. Unemployment rate is at 4.3% from the previous of 4.2%. And the average hourly earnings is expected to decrease a little bit from 0.4 to 0.3%. So lots of things happening, you know, and every time I look at the NFP, I've tried to look at everything, and not only the NFP, so not only the non-farm payrolls, and actually the three data, the NFP, the unemployment rate, and the average hourly earnings, because all of them will give me the right picture of what can possibly happen, all right? And at the moment, it's basically risk on, still risk on the market. US dollar is continuing to dump. We have Japanese yen very strong. We have euro very strong, pound very strong, Aussie, New Zealand dollar, Canadian dollar very weak, CHF very weak as well. So I continue to believe on shorts on US dollar, Japanese yen, shorts on euro yen, shorts on US dollar, any pair. So long Aussie US dollar, long New Zealand US dollar, short US dollar, Canadian dollar, you know, short gold as well. So just be careful with gold, because very, very sensitive at the last few days. But that's pretty much it that we are encountering this week. I'm very eager to know what can possibly happen. I will be having a video tomorrow again, on Thursday, explaining a little bit more. I'm going to try to do a little bit more research about the NFP and see if we can have some predictions for the actual number, you know, if it's going to be as the consensus expected, if it's not going to be, and I will be bringing that tomorrow into the next video. So don't forget, today from 4 to 5 p.m. I will be live marking my trades from high reward, low risk setups. For you to join, it's very simple. Go into the description of the video, join the Telegram, and I will be sending the link over there. I see you in the next video, or I see you tonight in the webinar, guys. See you. Bye-bye.